and welcome back to yet another exciting week of the Lazy Money Game. In this week's episode, I will start by giving an update to my portfolio, and afterwards we will touch upon the topic of recessions, since Monday the White House came out with a quite interesting article, and Thursday the US GDP numbers for the second quarter was made publicly available. So let's start with a quick portfolio update. The first thing we immediately notice is that there's a green circle for this week's episode. If we then go to the portfolio values tab, then you can see that the portfolio is up in value compared to last week. And just for the sake of argument, since I didn't make a video last week, it is worth noting that there was supposed to be a red circle last week. And perhaps more important is, you can also see that the costs have stayed unchanged, meaning now it is 13 weeks since I have done my latest investment into the portfolio. But even more important, if we continue to my favorites tab, namely the dividends tab, then we can see that we have finalized July and that I actually received a major dividend, namely from Store Capital, which is my biggest dividend contributor, since I received a little more than $260 after the US withholding tax. So in July I ended up at $556 for this month, which I am of course pretty happy about. And just because I like to play around with numbers, if we go back to the portfolio values tab here, if we calculate how much I have invested this year, meaning we take the cost of the portfolio today minus the cost of the portfolio in week 1, well then you can see that I have invested close to $17,000 this year. And if we take the average per week, well then on a weekly basis, that means that I have invested a little more than $560, which is pretty close to the dividends which I have received here for July, meaning that now my portfolio on a monthly basis is close to adding an additional week. This is where you can really see the snowball as well. If we then go back to the overview arc here and scroll all the way to the top, just so you can see how each individual stock has been performing over the last couple of weeks. If we then for a moment focus on the short term here, well, then you can see there's now only 4 companies left which are in the red, but at the same time, July has been the best month in the stock market since 2020. So overall, the market has actually increased quite dramatically in July. And in this month, I have actually lacked the performance of the S&P, since the S&P is up by a little more than 9% and my portfolio isn't. So in the short term, currently, then I'm actually getting beaten by the market. A fun observation you can make here is I bought Citigroup back in January, more specifically on the 10th of January, where I'm still down more than 20%. But 1 month later, I bought Agree Realty Corporation, where I'm up a little more than 20%. So trying to pick stocks, even if you think they're undervalued, is no guarantee that within 5 or 6 months that you will have made a profit. In this case, you can say that, well, they are more or less canceling each other out. So this is just to once again highlight the point of, if you're focusing on the short term, well, you should expect to see a lot of volatility, meaning that your stocks are fluctuating a lot in value. Even though I think I have done my analysis and was able to calculate a fair value for Citigroup, well, in the short term, I was obviously wrong since I'm down more than 20%. But luckily for me, I'm not too focused on the short term. But if you are a new investor, then 5 months or 6 months later, and you are still down more than 20%, well, it takes a specific mindset or a specific strategy not to be stressed about it. So this is definitely not for everyone, and there's no shame of admitting that. So if this seems like too much work, too much hassle, well, then just buy a passive index fund and forget about trying to pick individual stocks. If we then continue with the topic of a recession, well, then on Monday, July 24th, the White House came out with this article, namely that Janet Yellen is debunking the misperception that the US economy would be in a recession just because you have had 2 quarters in a row with a negative GDP growth. And I was quite baffled when I saw this, since if the White House is trying to alter the definition of what a recession is, well, this cannot be good news. And when I then saw that Michael Burry has retweeted this as well as something that you shouldn't really look at as positive news, saying that currently we are one leg down and there's one more to go, since when they are trying to change the definition, then you more or less would know that this is coming. And I mean, I was really surprised when I saw this. So what to do if you don't even know what the definition of a recession is these days? Well, what I did was I tried to research a bit more, and to my surprise, apparently in the United States, it is the National Bureau of Economic Research that single-handedly determines whether or not the United States economy is in a recession. It's not sufficient that you have had 2 consecutive quarters with a negative GDP growth, even though that is what I have learned and what I'm pretty sure that most people would actually think of. Maybe because it's simply the simplest explanation to give to people and it doesn't require too much additional understanding of economics. So my initial thought from Monday that something must be horribly wrong when the White House is trying to alter the definition of what a recession is, well, it was simply my lack of knowledge that led me to that kind of conclusion. And it definitely didn't help either when I saw that tweet from Michael Burry. But apparently there simply just is a difference in the definition of a recession. So how severe and if the US economy will go into a recession, we will simply have to wait and see. So the natural question that you are sitting with now is the exact same question that I was trying to ask myself. Well, when will we know if the United States economy is in a recession? So in the Washington Post, I will of course include a link in the description for this article so you can go and read it for yourself. The depressing answer is, well, it is 8 economists from the National Bureau of Economic Research that decides whether or not there is a recession. And the issue here for us when we want to know this answer is they don't have a fixed meeting schedule. It is closed door meetings. There is no press release. So we will simply have to wait and see. How long we will have to wait, no one knows besides these 8 people. So unfortunately, even though I thought it was a pretty clear question with a pretty clear answer, since we had 2 consecutive quarters with a negative GDP growth, unfortunately there is this difference in the definition, so depending on who you ask, you will get a different answer. So currently we will simply just have to be patient and wait and see. But perhaps the much more important question to ask is, how would you invest during a recession? Since it seems wisely to at least prepare for that kind of scenario. So the short answer to this question from my side would be, I will simply do as I have always done, try to buy into businesses when I think I can buy them at attractive valuations. But I mean, if you do a quick Google search, then you would end up with an answer like invest in well-managed companies with a low debt, good cash flow and a strong balance sheet, which is pretty similar to what I'm actually doing already. So that actually sums it up for yet another exciting week of the Lazy Money Game. So hopefully at least you have learned something more about recessions, just as I did. And if you have made it all the way to the end of the video and have enjoyed the content, then please consider leaving a like. It really helps out the channel a lot. And until I see you next time, bye!